So we've been range bound for the last 2 days, as you can see here on SPX. Not that much of a surprise because we do have Jackson Hole tomorrow on Thursday. We've stayed right under my supply zone right here, which I've drawn out. Had this on the chart for a long time now. So if we go to the daily chart here, yeah, I have a lot of lines on this chart. I have another one that'll be more simple, but where I got this from was all the way back here. This major pivot, you can see this big pickup day. This is very key. The low here is very key. It goes to 4,220 on SPX, and the bottom is this double bottom we had right here because this acted as a very strong bouncing point for this major rally in March. Also was a few other supports over here. Same thing with a resistance over here. So it's acting as a supply zone right now because we are under it. Did the same thing back here when we consolidated. So we have yet to get back above, which is very key because we have 3 daily closes below this supply zone now. So that is pretty bearish, at least for the time being, and that in itself, I expect some form of a lower low to be met. Just because we see a lower low does not mean it has to continue lower and just tear through a bunch of new supports as we go down. I expect to get a sense on how strong this potential bounce can be once a lower low is met, which would be under 4,119 as of now, based on the bounce from whatever we get, whether it be after Jackson Hole or maybe even before. But I want to see price action following some form of a bounce. I've personally been looking for under 4,100 for various reasons. One, my algo has a lot of supports around that range. Another reason why you can see over here, there are some major pivots, and I characterize these as major pivots back here in end of July because of the bounce that it made on the 15-minute chart. So for example, if I draw a pivot line right here at 4,091, roughly 4,090, you can see here we had a big flush candle for the 15-minute back here that was picked up with a huge reversal the next 15-minute. This is a very bullish setup, and I'll zoom in a little bit here. This is a very bullish setup because of how bearish this last 15-minute candle was, which then turned into bullish, and then the bears from this 15-minute candle and the prior candles ended up getting squeezed out because of how aggressive it was off of this 4,090 level. This is a characteristically you see this before a much larger move up than just a few candles, which is exactly what happened. It rallied all the way into the close, and then the following day we had another big support around 4,095, which had a massive pickup. Same exact thing when we hit over here to end the day on August 2nd. We had a big gap up off the 4,090 level. That's a very big pivot if you have price action just like this off of that level. And if you look back into history, I'm not going to do that just for the time's sake of this video, you'll see similar outcomes around this 4,090 level. That's what I'm eyeing personally for a move down as of now to get around that range. I'd probably add short-term calls off of that. So I normally don't look around at least Twitter or YouTube that much to get a sense on what other traders are thinking, just because I have my own setups. I like to keep just the bias from a lot of other people out of my mind. I like to just stick to my guns, what I know based on my own experience. However, I have seen a lot of people calling for like sub 4,100 or 4,100. Even this 4,090 level has been mentioned by a few people that I've seen in my feed now, which is questionable because again, they may be using similar methods to get this level here that I have right now, but I don't like it when a lot of people are thinking the same thing. So typically when this happens, you either see it get front run. For example, we have something over 4,100 that gets picked up and continues upward, or you actually see it go straight through the 4,090 level, which is what I'm looking at right now. And we have these two other levels right here, 4,080, 4,067, two very key levels. I'm expecting the latter where we actually see it go straight through roughly 4,090 where I wanted to load. So I'm actually going to hold off on entering too big of a position around this level, even though it's such a big support like I shared with you. I'd like to honestly see 4,080 where I'd add a bigger one. 4,067 would be like that last kind of area, which I'd also have a stop loss under that level if we have like a 15-minute to hourly break below, depending on my size. But also that brings the question, why am I going long when I have a very large long-term short position? And the reason is I'm a trader. I see potential and I see opportunity in an upside play because of how the market's structured right now. We had a major rally. This is not a blow off top one. I see personally, I see chop. I've told you guys, I see chop in a big range between like this range roughly for right now. We don't just fall straight off after you see this much bullish momentum to the upside. That's not how the market works. It's not market dynamics unless there is like some major catalyst, kind of like we saw before COVID. But this doesn't happen where you just keep falling straight off of a big rally like this, at least not the structure that I'm seeing right now. So I'm expecting there to be lots of dip buyers, especially around these levels that I gave you here. So just something to look out for. You do need to just be mindful of that because there's going to be chop along with this. You're going to see a lot of bulls trying to enter as we fall down because they believe this is a dip buy as we continue up. And you're also going to see a lot of people taking profits that made like a lot of money on the upside, or maybe you're getting scared right now thinking that there's a lot more downside. You'll see them take profits while bulls buy into it because they think it's a pullback. So it's just back and forth until it makes a decisive move, which I personally believe will end up being down, which I've already told you guys about. But for now, I'm playing based on the short term, and that's what I'm sharing with you guys here. Again, I have long-term accounts that have puts in it, but for the short term and for my swing account, I'm looking for some form of support around these levels that I will be able to get back up to 4,160 again in the supply zone. I personally think it probably continues higher, and we have a fake out based on this gap zone. So you see a big downward gap right here. I personally believe that it will go inside of the gap. Ideally, it converges with this line right here. I don't know where that will be based on time because I don't know when it would get up to here, whether it be August 29th, 30th, or even further down the road. But this is a key resistance, this line right here, so roughly around 4,200. And then also 4,220 roughly will be another hard resistance if we get up to there. I personally believe we will have some form of a fake out to the gap fill, as you can see here. Kind of like I've shared with you in previous videos, where we have us go like about halfway, like 4,210, 4,215, and then it falls back down, maybe find support around here, and then maybe it wants to go and gap fill or just continues lower. I don't know. Figure that out in a future video once we get there, but I believe there will be a fake gap fill at first, so keep mindful of that. Everything is going according to plan with the VIX right now. You can see here we had this major consolidation in our demand level, which I've had for a long time. This was back, like I made this, I think, back in November, of 2021. Right here still is applicable to right now. You can see we consolidated in this demand zone just like we did back here, and so on and so forth. We did pop up above the demand level. Not only did we pop up above the demand level, we popped up above this key trend line right here, which is acted as support 1, 2, and 3 times so far. Now we are above this level, above my 22 key trend line we have right here, which acted as a very key support and resistance along the way. So this is a key level, and it's perfectly above for right now. So as long as we stay above, especially with 2 daily candles, that's kind of how VIX likes to work. 2 daily candles is good confirmation. We've had 3 daily candles above all 3 of these levels right now. That's bullish for the VIX. Does it want to come back down and retest 22? Probably, and we'll probably see something like that, or maybe even go like a little bit under. But for the most part, we're over it right now. You have to be extremely cautious as long as VIX is over this 22 level and above this blue trend line, because upside can go all the way up to 30, 31 as of now. So that's something to watch. If we go up to 30, 31, there's probably going to be some form of a pullback on it, but there's still potential to go up to 35, which is acted as a very key resistance characteristically 1, 2, 3, 4, 5, and 6 times so far in the past year. It's acted as a very key resistance. So this is what happens when you get back above these key resistances. You have upside to 30 and then maybe even 35. So you do not want to mess around with this as long as it's above these key levels. Definitely look at the 2-day daily candles as well as the weekly. That'll help give you a better sign on it. But you need to be cautious if you are a bull and we have VIX above here. You don't have to listen to me what I said earlier if you don't want to, but I am just telling you guys here, be cautious while we're above here because things can get started to pick up in terms of volatility very quickly as long as we're above here, as it has in the past. The last thing here in terms of dark pools, it's actually been pretty weak the last few days, although we did have a 3 billion plus one, and I believe that did show up. Yeah, it was Monday. We saw 3.2 billion worth of premium. This is the largest one we've had in a very long time, honestly. We typically saw these pretty consistently back earlier in the year, like back in the spring, end of winter of 2022. But now we finally got a 3 billion plus one at 422.23. So this is a very key level to look at going forward. And it also just happens to be right above, if we go here to, actually I'll go over here to the SPY chart, happens to be right around that gap fill. If we were to potentially go up and fill that. Now, remember I said there's probably a potential that we do a fake gap fill where we go up and then it goes back down because a lot of people think the gap's going to fill to the upside. Again, could and probably pull back off of that. After that happens, could it continue up and then fill the gap? Like I said, sure, it could if it wants to, or continue down. That's just up to the future whenever that happens. And again, we will do a video on that once it gets closer. But very key level to watch for because this happened right before we had a major gap down and a big dump. So hopefully this video was helpful to you guys, giving you guys kind of like a sense on my thinking here. As of now, though, the short term would be bullish in my opinion. We have some type of upward move just because this is kind of how it has to happen. You can't have just a straight shot down off of what we had earlier. There are a lot of dip buyers thinking that we will continue to rally up, as well as people just taking profits at the same time. So there's probably going to be some chop like I shared with you earlier, but we are getting a lot closer to where I believe my thesis will be correct of continuing to have a lot more downside. So I am holding on to my longer term shorts. I have November, December, January, and even March puts on the market right now in multiple accounts. So I'm going to continue to watch for that and where I think that might go. But I'm a trader at the end of the day, so I'm going to trade what I see opportunity in. So that's what I will do for right now. But appreciate you guys watching this video, and I will see you guys on Sunday.